Hey everyone, today we are diving into why I'm invested into Meta platforms. Just a reminder, I am a freelance designer on my journey to become full-time trader and investor. I'll be sharing everything: my wins, my losses, my portfolio, my trades, my trading strategy. I plan to upload weekly videos with all my trades, all my investments, the good, the bad, the profits, the losses. If you like this content, please hit like and subscribe. Your support motivates me to keep going. So, as you see, Meta is my second biggest holding, and it shows my strong belief in its long term growth potential. And it will probably become the biggest holding in the future because it is on the great discount, in my opinion, now. So, now let's move to the chart analysis. Looking at the chart, Meta stock has taken a recent dip, but I see this as a temporary pullback driven by higher spending on growing initiatives and market volatility. And now let's move to the balance sheet overview. As I mentioned before, in the income statement, the main things I'm watching are total revenue, net income, diluted shares outstanding. And in this situation, we also will take a look to the total operating expenses because this quarter, Meta increased their expenses drastically. I'm usually watching the annual income statement, but also I'm going to the quarterly to see some more detail. So if we will take a look to the total revenue, we see the growth of Meta is slowing down a bit, but it's still very fast in double digits and even not like 10%, it's double 10%. And if we will take a look into the TTM, that means that the year is not ended yet in the balance sheet. They are already outperforming in about 15%, something like that. So if we will take a look into the quarterly, we see that each quarter they are growing in about 20%. I believe for Megacap, these double digits are amazing. They grow so fast that it's difficult to compare it with someone else. If we will take a look into the net income, we see that it's not so stable as revenue, but it is probably because of the investments they are doing to the growth. But still, if we will take a look into the positives, they're usually like 57%, 35, 68, 59. This is like unbelievable numbers, I would say. Even now, when the year is not finished yet, we see that the net income amount TTM is almost the same as it was here in the last year. So in the quarterly, if we'll take a look, the income was much lower this quarter because they invested into AI a lot now. If we will expect that the last quarter will be at least, let's say, between these numbers, it will be at least 8 billions. They are already over the last year. Of course, they will not grow so fast this year, but it's still a great number. And I believe that this investment is very temporary. The amount of investments will be reduced later. What I also love, they started to reduce their shares outstanding. And if we take a look in 2018, the amount of shares was 2 and 9 billion. And now in 2024, it is 2 and 6. So basically, with the same amount of shares we own, bigger percentage of the company. So let's dive into the total operating expenses. As you see, the total operating expenses were growing all the time, but not so drastically like this year. That's because they're investing into the AI a lot now. And I believe, as I mentioned, these high expenses will be reduced in the next years. Let's take a look into the balance sheet. The main things I'm watching usually are total assets and total liabilities. And if you see, the assets are always higher in Meta than liabilities, and that thing I love. And what I also like that the growth of the assets started to grow almost the same speed as the growth of liability. If you see before, the liabilities were growing much faster than the assets, even if the assets were higher, than the liabilities. But now, if we will see in the percentage in the last 2 years, the speed of the growth of the assets is almost the same as the liabilities. Also, I like to look into the total debt just to check if it's not higher than the assets, and it's not, what I like, yeah. And one huge pro, what I like is that if we will take the current assets, not the total assets, they are still a bit higher than total liabilities, not the current liabilities, but the total liabilities. This tells me that this balance sheet is very strong. If we will dive into the free cash flow, we will see that the free cash flow growth was really fast and the speed was really amazing. The exception was 2022 because they invested a lot into the metaverse and it was their fail. I agree with that, but they recovered really fast later by reducing the amount on investments and the growth was here back and they are still growing over 20%. As I mentioned, growth over the 20% for the mega cap, it's difficult to compare to anything. I'm always telling that Meta is a cash generating machine. It's just a monster who is printing the money. If we will take a look into the TTM free cash flow, we see that the number is lower than the last year. But it's probably because they invested into the AI so much. And if we'll take a look quarterly, last 3 quarters were like negative. But but I don't believe this is an issue because I know how Meta manages the money. And if we will take into the 2022, it was the same, yeah. And then the growth was like 4,000 something in 1 quarter. These investments of the free cash flow will be just higher in the next few quarters. So I believe they will recover pretty fast. Let's dive into the main valuation metrics now. The PE, price to earning ratio, is about 27. It's showing it's a fair valuation for this kind of growth and the mega cap company. But the forward PE is a little bit slighter than 20. It is really cheap for this company. And I don't believe we will have this discount in the next year. Maybe it will be the same price, a little bit lower in the next 2-3 months, but I think it is a blessing and a good discount that you can accumulate the position now. If we will take a look into price to free cash flow, it is around 34. It's reflecting heavier investment, but it's justified by long-term growth prospect. So I believe price to free cash flow, it's not such a big deal now. If it will not be reduced in the next year, maybe you can start to worry. But for now, I believe this justifies the long-term investment. Earnings per share is a little bit lower than it was before, but next year expectation is that they will be growing about 30%. For the company as Meta, I will not be tired to mention that again and again. It's ridiculously great number. And the earning per share the next 5 years, it is about 11ish 12%, and this is a really great number as well. In the next 5 years, if they will manage to grow in 10%, I will be really happy with that. If we will dive into the EPS past 3-5 years, we will see that they were growing 20-30%. And this is amazing. The gross margin is really high because this is a software company. It is 82%. This is really great. Even for the IT companies, it's a really high gross margin. Even the profit margin is about 30%. It's really high. Let's try dive into the product and user growth with the revenue contribution. So as you see, a family of apps in Meta, like Facebook, Instagram, WhatsApp, and Threads, generates approximately 98% of total revenue. It's around $162 billion annually, almost entirely from one advertising only. So if we take a look into the chart, we see that the biggest chunk of the revenue is family apps. The reality apps is something tiny, and the other revenue, it's not even visible here. So if we will take a look into the user growth per app, we see that each app has the growth. Even the Facebook, which is not so popular in the younger audience, the amount of user is still growing, especially in the Asian countries. Instagram has rapid growth in advertising revenue and user engagement. WhatsApp has huge growth as well, and the high user engagement is about 98%. And the WhatsApp monetization is still not developed very well, I would say. They are implementing new ways to monetize from WhatsApp. Threads has fast growth, over 350 million active users, expecting to contribute about 11 billion to the revenue by 2026. And we see that the Threads is the smallest part yet, and maybe it will be growing much faster. Threads is the smallest part of the Meta revenues, but we see that Threads is the newest app and it's growing rapidly. And I believe in the next few years it will be above the Reality Labs, definitely. Reality Labs is the sector where Meta is investing, like metaverse, AI, and hardware. It's about 1/3 of total revenue, but it's still in a loss. And this is like more experimental sector. But in the future, we're expecting that we will be gaining the money. Now it is a loss because they're experimenting a lot, but the new products are coming from there. So now let's take a look what I think are pros and cons for the investing into Meta. Yeah. So let's start from the pros. First is strong diversified revenue stream focused on high margin advertising. As you have seen, I showed that the gross margin is about 80%, and this is mostly from the revenue stream focused on the advertising. It has robust revenue and profit growth. with about 22% in revenue and 36% in the net income rise. They have an outstanding balance sheet with assets nearly 3 times to liabilities, and also, as you have seen, the current assets are higher than total liabilities. This is a huge plus. The highest gross margin, about 82%, reflecting operational efficiency. Like, I love this high margin, and when they don't produce too much physical products, it will not be lower. They're trying to do some physical products like augmented reality, smart glasses, and so on, but this is such a tiny sector. Emerging platforms like Threads show promising user and revenue growth. The potential of Threads is huge. It is a very tiny platform comparing to Facebook, Instagram, and WhatsApp, but that means that potential of growth is much higher there. They have major investments in AI and metaverse technologies for future leadership. I am not so optimistic about the metaverse. It's still very vague, but if we are talking about AI is very effective at helping people to work, to live overall, even replacing people in some areas. So I believe this will be a huge revenue generator in the future. So let's dive into the cons. And the first one is heavy capital expenditures and our decompressed near-term free cash flow and profits. That's true, but I am not worried about that. We have seen that Meta was doing this multiple times and they were coming back even stronger. The Reality Labs losses create risk if metaverse adoption slows. And that's true, but this is such a small chunk of money that I am not worried about that. But also, Reality Labs works with AI products. So I'm not worried about that. Market volatility and regulatory risk could influence stock price. That's true. It's mega cap. It happens all the time. But as I mentioned before, all these mega cap companies has this issue, and they still are dominating their niches. Intense competition in digital advertising and social media may pressure margin. It can happen, and they have competition like Google, TikTok, but most of the advertising apps are from Meta. So I believe they will have the competition, but I don't believe that in the nearest future anyone can press them. The average price target is approximately 813, telling us about a big upside from the current trading prices near 613. Some high targets reach as much as 1086, and I believe that Meta will be there sooner or later, while the lowest is around 600. Even if it will be going lower than 600, I will be buying it more. I would say that. Analysts praise Meta's leadership in AI adoption, robust ad revenue growth, and strong fundamentals, while noting some caution around increased spending and macroeconomic factors. But if they praise Meta leadership in AI adoption, they should be bullish on the company. But when Meta announced that they're investing in AI more, they just started to sell. And I believe this is a huge mistake. Recent notable ratings include price targets about 900 from Bank of America, 915 from UBS, and 920 from Cantor Fitzgerald. It's maintaining a positive outlook on sustainable growth. And I agree with that, but my numbers actually are higher. I believe my numbers are about 1,000 for now, at least. So the general sentiment of Meta is undervalued. And my opinion is the same. I really think that Meta is undervalued, and this is a big opportunity now to buy. Of course, it's not a small company. It will not give you 10x or 5x in the nearest few years, but it is stable company. The risks are not high, and you will definitely earn here. So the final thoughts are I'm confident in Meta long-term prospects, and I will be increasing my position despite short-term risks. Thanks for watching. Please hit like and subscribe, and let's grow together. See you in the next videos.